The high cost of capital in Africa, as well as technological advancements, are on the agenda at this week's World Economic Forum, Davos, Switzerland. Leaders in government, business and civil society have been meeting to find solutions to challenges the world faces against a difficult global backdrop. SABC News reporter Glorious Sefako-Musi has more.
How does ABSA balance the need for energy now and decarbonization?
I think this is an issue that we have to contend with, especially as a developing country, and taking into account the requirements for energy in broader sort of African continent. Less than 50% of our population has access to energy. This is in Africa. In South Africa, of course, the number is definitely higher. So we have to balance between energy transition and ensuring that people have access to energy. These issues are complicated, unfortunately, by geopolitics. In that 2 years ago, issues of climate change and energy transition were a major feature at WEF. This year, there's hardly any conversation about climate change and energy transition because of what is happening in other parts of the world. But nonetheless, we think we have to take a medium to long-term view and make sure that we're pragmatic, we invest in the right kind of technologies for energy submission, or rather for energy supply, and from a bank point of view, we have to follow where clients are taking advantage of the opportunities. Given the demand for critical minerals, there's no doubt that the African continent is going to offer massive opportunities from an energy transition point of view, as well as from ensuring that we could support AI and the growing trend towards digitalization.
So another issue that's been on top of the agenda at the World Economic Forum this year is the issue of AI. So back home we have, people that still struggle with connectivity. How does, many banks are now moving online. You have to work online before you could actually just go into the branch. How does the banking sector, ABSA, make sure that this does not lead to more exclusion of other people that can't even access internet?
I think this is a critical sort of issue for a developing country like South Africa, that we have to adapt and adopt new sort of forms of technology. And clearly, as ABSA, we are adopting AI. But we have to do that in a manner that is balanced. We will modernize ourselves, move towards AI, but at the same time, we'll continue to change the nature of our branches so that people can continue to access them. And by taking cash out of the branches, we also hope to simplify branches and put ourselves in a position where we could put these branches next to taxi ranks, next to train stations, so that they're easily accessible. I think at the end of the day, whilst people will adopt AI, especially those who are younger, even them, they'll still want to be able to talk to someone every now and then. And we have to strike the balance between the two. And ABSA is committed to ensuring that that balance is not lost in our desire to modernize and transform the organization.
So with the world the way it is, this is another issue that has been on the minds of many here in many sessions, fragmentation that we are seeing. And I'm just thinking of how we've talked about the cost of capital over the G20 period in South Africa. We heard a lot about how African countries are paying more for their debt. That is also holding back development on our continent. The discussions here, is this fragmentation that we are seeing now going to make things worse for Africa?
I think there are different elements to fragmentation. I think the first one is that the global rules that help to keep the financial system globally together and easily interoperable is becoming fragmented. And we think that is dangerous, because what that will encourage is the proliferation of infrastructure, which ultimately is going to be very costly to the end users. So we appeal to regulators as well as to policymakers that despite some of the challenges that the world is dealing with, let us protect and maintain the integrity of the global financial system in the interest of the end consumer. The second element is about the cost of capital and the cost of lending to people. There is no doubt that Africa suffers from Afro-pessimism, that the premium that is attached to African risk far outweighs the actual economic fundamentals that ought to inform whether a country is high risk or low risk. We think there's an additional premium that has to do with a perceived African risk that is not founded on any economic fundamentals or any commerce whatsoever. This is something that as ABSA we have been partnering with other financial institutions within the African continent, arguing that the rating and the perception of risk in Africa is exaggerated and it ought to be modified. There are no easy answers to that. Of course, there are countries that tend to undermine that argument, and that costs to some of the actions and decisions that we make as governments and the policies that we adopt. But even if we take those into account, we still think that there's an Afro-pessimistic risk that has nothing to do with economic fundamentals, and that ought to change so that the playing field is level and people of the African continent also are treated fairly relative to access to credit in the same way that people in other parts of the world are treated.